All right, guys. So welcome to this new live. So every Wednesday on my YouTube channel, Facebook, I'm having an expert in his field just come and to share what he talk, what we're gonna know. Today, the subject will be everything you should know about the life insurance. So I'm having today Steve Sinclair from Dundas Life. He's the one who convinced me and helped me with the life insurance. I was really anti-insurance until I got my daughter, and then I spoke to him, and yes, he convinced me about getting the life insurance. For the people who are on Instagram, just come and check out the Facebook page and YouTube. Every Wednesday, there is a calendar. You can check the subject for the next week or the few weeks coming later. But yeah, feel free to ask any question on the comments. And we're going to start right now with Steven.
Awesome.
Yeah. So how are you, Steven?
I'm doing excellent. Thank you so much, Falcone. I really appreciate you invited me onto your show here today. Looking forward to talk about life insurance. This is exciting.
Yeah, that's right. I think it's probably a subject I don't know. I mean, me personally, I didn't have a lot of education about that. Mm-hmm. So that's the reason I wanted to share it with my audience today about, why do we need the life insurance? Mm-hmm. How does that work? Do we really need it? Mm-hmm. So yeah, I'm just gonna let you first to introduce yourself before going into the subject deeper and explain what's the advantage of the life insurance.
Awesome, that sounds good. So I'm the principal broker at Dundas Life Incorporated. We're based out of Toronto. I'm licensed in British Columbia and Ontario. I moved out to Ontario about 2 years ago from British Columbia. And back in 2014, that's when I started my career in the life insurance space. It's been a number of years now. A little bit of background about me. When I first came into the space, I kind of worked my way up the ladder at what we call a captive agency. And I was able to sell only one type of product through that company. And that's where a lot of insurance agents and brokers start, is in the career agency or the captive agency. And from there, I grew a team of about 15 to 20 agents at one time. I was training them. I did a lot of policy services. So I'd come back, meet with clients, ask them about their policy, see if they understood what they had or if they still had their policy. And I did this for a couple of years. And eventually, I moved more into the broker world. I worked as a director of advisor success at a fintech company as well. So I've had a bit of a unique experience where I've been boots on the ground advisor, and I've also been training advisors and seeing advisors from 1,000-foot level. So it's a bit of a unique role that I've played. I love being boots on the ground. I love dealing with clients. That's my favorite part about it.
Yeah, that's the main reason you switched to life insurance broker, right?
That's it. Being a broker offers you a lot more opportunity to work with the client and find the right solution for them. Yes. I can work with really multiple companies and any company I really want, but it also comes with its own risks. Starting out in the industry is very, very tough for young people. I'll say the average age is about 61, 62 years old in this industry. And it's tough because you have to go through your licensing exam. And if you don't know how to do these certain things, there's a lot of compliance as well. Then running your own company is the last thing on your mind. You're just trying to, you're starving at the beginning, trying to eat, right? So, but as a broker, you'll find that most brokers have some skin in the game. They've got some experience. They've been doing it for a bit longer, and they're willing to take on a bigger risk because they understand what they can offer to their clients as well.
Okay. For the people who just join us, can you just remind quickly the big difference between being broker insurance versus someone, let's say, in a big bank and offering life insurance?
Sure. So I'll say that there's really three types of agents out there. You have what's called your captive agents, you have your non-captive agents, and you have brokers. Now, captive agents they're only able to sell one product from that company. So they have a company that they work under. They can only sell those products. So they're limited in their product shelf. And so oftentimes this is where a lot of agents will start out. Now, non-captive agents have the ability to sell more than one type of company, but they're limited by their company in which companies they can sell. So they may only be able to sell, say, 4 companies that are parent to them, right? Or partnered with them.
Okay.
Then a broker is more of what we call independent. And independent meaning that we can choose who we want to work with. We can choose what companies we want to sell. Now, not all brokers will sell the same companies, but they will have access to them as well. And so that's really the key difference. And so when you go to, say, a large institution like a bank, you're going to be offered a product just straight from them, and that would be more of the captive model. Whereas if you go to your broker, you're going to have a lot more options that may even include that bank, right? Or it may not. So there's multiple options for you there.
Okay. And like now going into the life insurance, can you maybe before explaining how does that work and what it is like, why do we, us really need a life insurance? And for me, I remember I was only, pretty anti-insurance, saying like, oh, I don't need any insurance because let's say if I die, I don't really care of what's going to happen. And then you came to me, I was married at the time. I'm still married, and I just got my daughter. So now the mindset just switch it to, oh yeah, now if I die, okay, my daughter, my wife's going to have to support everything. But what's the main reason of we need like a life insurance?
Yeah, and that's a great question. Everybody's situation is a bit different. I will say, your situation was a bit different than somebody that I'll maybe meet later on today.
Yeah.
When you look at Canadians, right, and you look at the average debt load per Canadian, roughly close to half Canadians don't have $500 in terms of an emergency fund. So I'll say that one of the biggest reasons that I see for life insurance is that people have gotten late in life where they have no savings, they're still renting, and they just don't have the ability to save something. What life insurance does is it gives them that structure, and it gives them that funeral, that final expense coverage, something that's going to be there for them when they pass, right? Okay. Now, this is why I say everybody's situation is different. Well, what about the person who does have a bit of money? The way I see life insurance is really, it's about solidifying what you've taken the time to build throughout your life. And I think this was what I told you when we were talking about it. I said, well, Falcone, you've worked so hard to build this empire for yourself and your family, and you want to ensure that they have the standard of living that you've worked hard to gain for them. How are you going to ensure that even when you're gone, that's taken care of? And that's what life insurance does. So it ensures that standard of living is kept up. Now, the people who are maybe single, who don't have children yet, right? There's a few reasons why you would still want to look at life insurance. Again, going back to what happens after you pass, right? Yeah. When you pass, somebody's going to have to deal with that, whether it's a loved one, whether it's a family friend, somebody's going to have to pay for the things that you've kind of left there. So one is it's taking care of that, right? It's helping out with that. The other side is that when you're young, life insurance is much more cheaper. So life insurance is really based off age, health, and lifestyle factors. Now, as people get older, the price goes up. Their health also starts to decline later on in life. So it can be very, very difficult if you're pushing it off. So you may say, hey, I'm not married right now. I'm in my late 20s or early 30s. No problem. I don't have kids. Well, then you wait until you're 50 and now you're paying double the price for what you could have gotten. And you could have structured that for yourself. So, so really it's about looking at what is good for you at this time, but also is it flexible enough for the future?
Oh, okay. And like it's mainly to protect the people around us after we're not here.
Protect yourself, protect your assets, right? Really ensuring that what you've worked hard to build in your life is now taken care of even after a person passes. In the case of, say, an organization, you may look at key person insurance, where you get life insurance on that key person, that employee, because if anything happens to them, your business would take a hit. So if you're an entrepreneur and you've got a partner that you work with, you may consider, well, if this partner was gone, what would I do? Would this business suffer? Would I have some transition time? Do I have money to maybe purchase out the shares? What is your agreement that's structured there? So it really is taking care of those assets and making sure that in the event that someone passes in their demise, that it's all taken care of there, those assets.
Okay. And now let's say let's say now I'm a new guy, and how do you select the right insurance? Let's say for me, how do I what should I know like about the life insurance now, basically?
Yeah. So I always start with what's called a needs analysis. If anybody goes to our website, they'll see that we have an intake form that you can fill out, and that's a basic starting point to give me a rough idea. Then from there, it's based on the situation, what you're looking for, and then it comes down to, okay, what are the options that are available? Now, I mentioned that life insurance is based off age, health, and lifestyle factors.
Yeah.
So let's say, for example, a person is not healthy. We get a lot of people who have run into health issues. One of the most common is type 2 diabetes. A person may be very, very healthy, but be a type 2 diabetic. Well, insurance company is going to take a look at that and say, that's more of a risk. So the starting point for us is usually finding out a little bit more about the person, finding out about their health factor, and then deciding from there. And we can take a look. There's really, when I look at insurance companies, I can kind of break it down into the simplest form of there's your traditionally underwritten companies or your traditionally underwritten products, and then there's your non-medical products. And that's kind of a good starting point, because when we look at health, we say, will this person qualify? Will they get declined for insurance? And what are our options then, right? Now, traditionally underwritten companies, that means that you would have to do some sort of medical. They're usually the ones that you hear of, the big names like the Sun Lifes, the Manulifes of the world, the Canada Lifes. These are companies that are going to be a bit more stringent when it comes to approving you up front. They may have a nurse come out and visit you. They may do a blood and urine sample. Sometimes they only do a tele-interview, but they're going to do something to ensure that you're healthy. With a non-medical company, it's much more straightforward. And this is usually for the population that has had some kind of health issue. I get clients who have had heart attacks, strokes in the past. They're dealing with diabetes, type 2, I mentioned that. Maybe other factors that they're dealing with. And otherwise, they would get either declined or they would get what's called a rating. So then we look at a non-medical company for them and do a comparison there. And that's kind of how we start to grasp where we're going to go with the insurance there.
Okay. And let's say now we have two different scenarios. I'm 30 years old. I make, I don't know, 80K per year, and I'm still single. And let's say now I'm 35 with 2 kids. What would be, I know it's based on the lifestyle, but there's still advantage for both scenarios to have life insurance, right?
Yeah, definitely. I think, for the person who's maybe making the 80K, they're single. For young people, they don't often think about life insurance. It's funny because I talk to, most of my clients are actually their late 50s or 60s. They're people who have gotten to that point of life and said, man, I should have got this way back when I was younger, right? When you look at, something like a 20-pay whole life policy, for example, what that is a permanent policy that you only have to pay for, say, 20 years, after which time the policy is paid up, right? Yeah. In some cases, that may make sense for a person where they say, well, I only want to pay for 20 years. I have some extra cash right now. And they may say, get 100,000 of coverage. Well, later on in life, after that 20 years is up, they're going to keep that coverage, that 100,000 for the rest of their life, but they no longer have to pay for it. So going into retirement, they no longer have to pay for life insurance, but everything is taken care of for them. And that's a situation where a young person might want to look at that. The other is for the young family, right? The young family is the one that's on the budget. Typically, they've got young kids. They may be, at a point in their life where they don't have as much extra cash flow as, say, a single person or a person that's children are no longer dependent on them. But that time in their life is very important, because if anything happens to one of the parents, the other parent is going to be left taking care of the children, making sure they get into university or college, and just making sure that they're surviving. So in that case, you may take a look at maybe a combination of term, whereas we may look at term and say, we're going to cover you for the next 20, 25 years, right? Yeah. And that will keep the coverage fairly cheap, but at the same time, it also offers a larger amount of coverage. Or we could do a mix, like a combination of permanent and term. We don't have to pick between the two, so that we have the permanent, and that combines with the term. And then after the term is over, the parents can keep the permanent into the rest of their life with their funeral and final expenses. Those are just a couple samples. Yeah,
can you actually point out like the different type of insurance? I know you mentioned term, permanent, like what's, let's say for a beginner, as I was like maybe a few last year, Can you just re-explain like what's a term or permanent insurance?
Yeah, I'd say, when I break down insurance, there's a number of different products, but the simplest way to think about it is there's term and there's permanent products.
Okay.
So a term product is when an advisor will say term 10, term 20, these are term products and they're finite, which means that they have a finite period of time that they cover. So most common example is when a person is looking to cover a mortgage. It's a large expense. So they're looking for that period of time to cover. They want to cover the amortization period, 20, 25 years, 30 years. So we may look at a term 20, term 25, term 30. The benefit to a term is it can offer you a lot of coverage. The downside is that it is finite, right? So there may be a renewal period. There may be a time when the policy is going to change a bit. And that's something that you have to expect with a finite term policy. So, 500,000 of coverage is something that you would get a term policy for. Now, the downside with the term is that, let's say you do a term for 10 years. In the 11th year, you'd have to renew your policy again for another 10 years if you wanted to keep it going. And that's where people run into trouble later on in life, because now they get into their 50s, 60s, and now their term renews, but now it gets unaffordable for them because that new price in the 11th to 20th year is going to be based on their attained age, the age they are 10 years later. So that's the pros and cons of term. Permanent is a little bit different. Permanent, you can think of it like it will cover you for the rest of your life. And when people ask me, I need something for funeral and final expense coverage, they're typically asking for a permanent policy. It does come in a number of different forms. I'll touch on a couple of them. One is a term to 100. Term to 100 is like a term that I just mentioned, but it covers you to age 100.
Okay.
Downside is after
that exists, like term to 100. Okay.
Term to exactly, yeah. They try to make it pretty easy for you. A term to 100 will cover you after age. It will cover you up to age 100, but after that, age 101, 102, if you live past that, unfortunately, you're not going to be covered. The other type of permanent policy that I see a lot is a whole life policy. A whole life policy, the simplest way you can think about it is it's a permanent policy, covers you for your entire life or your whole life. Now, you're not going to get as much coverage per the same amount of cost than you would say with a term 10 and term 20. Usually the coverage amounts that I see most commonly in the family market are anywhere from about 25,000 to 100,000 of coverage versus a term where you're looking at $500,000 to $1 million or more, right? So there's quite a big difference, but the benefit of a whole life is that it doesn't ever change in price. So you just keep the coverage for the rest of your life. And that's why I say this is typically funeral and final expense coverage for people. That's why for young people, they can get locked in at a good rate, and then that rate never changes for the rest of their life.
Yeah. In terms of rate, can you give us like, I don't know, an average of the single person, 30 years old, the married at same age, maybe 35, and what would be the difference if they don't have any insurance, but they come to you at 60 years old? Just a quick analysis like that,
Yeah, I'd say for a person that's in their 30s, well, I was doing a quick look at some quotes. To give you an example, let's say, you have a male that's looking for a term 20 for 500,000 of coverage. This is a term 20, so 20 years of coverage. They'd be looking at about, if they're 31 years old, about $30 to $35 a month, within that range. That's for $500,000 of coverage. When you look at permanent, then you're looking at about $63 to $67 a month for whole life, and that's for that same person, that male, 31 years old. Now, if that person were to wait until their 50s for a term 20, they're now looking at about $145 to $150 a month, roughly, for a term 20 of 500,000. For a whole life, it's also very comparable. It's about 100 for 100K. They're looking at about 143 all the way to $180 a month. So they've gone up quite a bit, and that's just into the 50s. Once you get into the 60s, then you're looking at over $200 a month, typically for a person that's looking for just 100,000 in whole life, or even looking at term. So it can get quite expensive later on in life. And that's why I recommend when young people are looking at it is, okay, is it flexible enough for the future as well, but are we covering the needs right now?
Yeah. And I actually have like a question here, like from Instagram, and I think we wanted to talk about I talk a lot about real estate, and I think there is like a big confusion between the mortgage insurance and life insurance. Can you address that point, like Steven?
Yeah, and that's a great question. So mortgage, life insurance, there's some confusion around it, I think, for a lot of people. And I'll start with saying that when a person puts down less than 20% on their home, when they're purchasing their home as a down payment, they are required to purchase what's called CMHC insurance. And this is the first thing that people usually confuse mortgage life insurance with CMHC. CMHC is required. It's a Canadian Mortgage and Housing Corporation. They require you to purchase that insurance if you put down less than 20. Now, above and beyond that, the bank may say you can purchase mortgage life insurance. Now, mortgage life insurance is what we call a decreasing term. And there's a few key differences with that and with, say, a level term insurance. So with mortgage life insurance, it's meant to cover that outstanding loan, that mortgage. And so over time, as your loan is decreasing because you're paying it off, your coverage amount is going down, what we call the face amount. So I'll give you an example. If a person, say, purchases $500,000 of mortgage life insurance, they pay $100 a month for it. Let's say it's a 20-year term. Well, in year 10, now your mortgage has decreased, but you're still going to pay the same premium, the same amount you would have paid the $100, but now you're only covered for, say, $250,000.
Makes sense.
So that's why it's called a decreasing term. Now, with a level term 20 product, life insurance, I say level because that means that the death benefit and the payments are the same. So let's say, again, same example, you're paying $100 a month for $500,000 of coverage for 20 years. Well, 10 years goes by, you're still covered for $500,000 and you're still paying the same amount. So none of that's changed over the course of that 20 years. Now, here's where one of the biggest key differences is not just in the fact that it's decreasing or level, but where does the money go? And that's where a lot of people don't understand. Mortgage life insurance is meant to be a creditor protection. So when a person passes, it's meant to pay the creditor, not your beneficiaries. Okay, it's meant to pay off the mortgage. Whereas, that's a big difference.
Money in our pocket, but
So the question is, what happens with term life insurance? Where does the money go when a person passes? Well, that $500,000, if your mortgage is only $250,000, that $500,000 will first go to your beneficiary as a non-taxable payment to, let's say, your spouse, and they will receive that $500,000 that they can use, whether it's to pay off the mortgage, whether it's to continue just making payments as before. But that $500,000 now can be used towards whatever they want. And usually this is funeral, final expenses, ensuring there's a standard of living still, because now they're missing that income from their other spouse. Taking time off to grieve. In Ontario, we get 3 days, right, to grieve. I don't think that's long enough. So even taking that time off from work and just allowing yourself to take some time and get everything in order. So that's the big difference, is one pays the beneficiary directly, one pays the creditor directly.
Yeah. And in terms of wants, I mean, let's say, the insurance has to refund the person that not in this world anymore. Like, is there any impact on the income tax about it?
So
is it like free money, or just, no, I receive 500?
Well, it's never free money. It was paid with after-tax dollars, right? And that's why it's non-taxable income. Now, there is some cases where, let's say, for example, the estate is named as the beneficiary. Now, in life insurance, you can name a charity, you can name a person, like this could be a spouse, a friend, really you can name whoever, but if you name your estate as a beneficiary, then the life insurance is subject to probate tax. And so when I am meeting with clients and talking about their beneficiary, they typically want to do their spouse, their children, or somebody else that's a loved one to them that's going to handle any of their estate that's issues that come up.
Okay. And if you would have to, like, kind of summarize the life insurance, so it is kind of really crucial, like, to protect the asset that we just built.
Yeah.
We have two types of insurance, the term and the permanent one, always based on the age, the income, the lifestyle, and the health. And better to take the life insurance when we are young than, like, when we are, like, kind of a little bit older.
Yeah, don't wait.
And better to go, I guess, to a person like you, like, to have access to all the different companies, so you can have, like, a real comparison between all the different products that exists, right?
Yeah, and I'll touch on that last point as well, in finding a broker, because not all brokers are the same, of course, just like any industry, right?
Yes.
I tell clients, find somebody that you like, and this is something that I even had said to you, Falcone. I said, do you like working with me? And don't hurt my feelings. If you say you don't, that's fine.
Yeah.
But I always tell clients, you have to like working with that person. Do you see this person as somebody that will be there in the long term for you? I mentioned early at the very beginning that I used to do policy services. And in my opinion, the reason that most claims don't get paid is not because there has been some underwriting that's happened later on. We're taken care of as a client now in Canada, where we do the underwriting up front. It's that most people don't tell their beneficiaries that they have life insurance. And that broker that was working with them never came back and never did their due diligence of checking in and saying, hey, do you know where your policy is? Have you shared this information? Have you updated any information that's changed? These type of things, a person over 5 years, 10 years of their life, these things change, right?
Mm-hmm.
So it's our duty as brokers to come back and check in with our clients and work with them over the long term. And so I say to anyone who's looking at a broker, look for a person that you think is going to be around for a while. This industry is tough, so if you have somebody who's a junior, are they working with somebody who's maybe not a junior that's been in the industry for a while? It's okay if you like them and they're a junior to work with them, but just make sure that there's somebody else there. Make sure you like the person. Make sure that you can entrust your family's needs to them, because at the end of the day, when a person purchases life insurance, it's not them that's going to be claiming it; it's the beneficiaries, right? So, so those are some things to kind of look out for. And do you trust your broker? That's another big one. Do you trust them to do these things?
Yeah, and one thing I think I'd like to add is one of the point, in addition of liking working with you, was I think you do every year like kind of an annual checkup, just to see if, let's say, we got more properties, we got different lifestyle, and that's a big difference, because from what I've heard from other people, they've got insurance broker, they didn't hear anything else once they got the sales, and after 5-10 years, I guess they probably sold the house, and they might not have the right protection for them, right?
Yeah,
that's probably probably happens a lot.
It does happen quite a bit. I mean, in this industry, it's tough to get started. I mentioned that early on. It's very tough to you're learning a lot as a broker. You're trying to run your own business essentially, and so a lot of people don't make it past the 2 to 5 year mark, right? So it's very, very tough. But that being said, you still have the company. Like, let's say you purchase a policy through Manulife, you always have Manulife that will have your policy, despite that broker no longer being there. But the downside is that when your beneficiary goes to claim that, they're going to have to call into, say, a 1-800 number. Where will they know to make that call? Has any changes happened? Will they know how to navigate this? And at the same time, the family is grieving. So, you're not going to be in the right mind space when you're grieving. You just lost a loved one, and now you've got to call some company for their life insurance or find out where it is. We hear horror stories about this all the time, right? So I do check in every about 1 to 3 years. Some people like it every year. Some people like it every 3 years. They say, leave me alone for the next couple of years, and not a problem. But we do that check-in just to see if anything has changed. Do just quick updates. Do you know where your policy is? Do you know who the company is with? Have you shared this with your beneficiary as well? And we make sure that, if we've updated anything on our end, that they know that too.
Yeah. And that means that, let's say, I don't know, for any reason you decide not keeping doing like a life insurance broker, I'm still going to be in touch with the company. We're still going to be here like in 20, 30, 40 years, right?
Exactly. And, things could happen to me, right? I'm only human as well. So, I work with team members as well. We have a succession plan in place in case the worst were to happen to me. Now, in the event that something were to happen to the company itself, well, we also have it in place where you have your company that's also backed by your insurance carrier or insurance company. So if you were to purchase it through Manulife, Sun Life, Canada Life, any of these companies, you're going to have still your policy with that large company as well. So it's kind of the protection of not only the brokerage, like Dundas Life, but also the companies that you're working with. But we would we'd have to give a notification and update if anything were to happen, of course. And so we've taken steps to ensure that you as the customer are protected.
Okay. And just like, I'm just gonna check if we have any question from the Facebook, YouTube, or Instagram. But what would be the best way to contact you? Would be, I don't know, social media, the email. I guess you can probably share it here. And I'm going to share all the link on the comment section for any person who's going to watch the video later.
Oh, for sure. Yeah, you can contact us. Our website is probably the best way to contact us. We get a lot of traffic coming through there. It's dundaslife.com, nice and easy. Dundas like the street, life, life.com. You can go to dundaslife.com. We do have our Facebook page that gets a lot of attention as well. Instagram as well for Dundas Life. And if anybody wants to contact me, my email is steve@dundas.life.
Okay, perfect. Anything else you want to add? Maybe if, like you're the expert in life insurance. So something else you want to add that we didn't cover? I feel like today we have like a really shy audience. But something else that you want to share, and just to know if we're going to wrap it up or just get any question from the audience.
Yeah, I'd say either they're really shy or either I did a really good job at covering a lot of info. No, I think we've covered a lot for the day. I think these are a lot of the questions that you've asked are the questions that I get from clients all the time. They're unsure of what to look for. They've maybe done some research online. Our team is here to help you. If you do have questions, you can reach out to us directly. For us as brokers, we try to keep it as simple of a process because we understand that life insurance isn't something on everybody's mind. I will say that we also work with our clients on the claim side of things. Yeah. So when the worst does happen, we want to make sure that your claim is being paid out as well. So we kind of try to take you from step 1 all the way to the step 5, step 8, and just work with you for the long term. That's our goal.
Okay. All right. Let me check. So Instagram. Okay, we got people here. No question here. No. So yeah, Steven is one of the life insurance broker. I mean, he's my life insurance broker actually. And okay, no question on Facebook, YouTube, nothing else. So I guess that's time us to wrap it up, Steven.
Awesome.
I want to thank you again for your time. For the people who's going to watch the video later, you can still go on Facebook, YouTube to see the review or see the calendar for the next event. All the information to reach out to Steve will be on the comment section, or just send us an email, send us a DM, and we send you like all the information that you need. Guys, get your life insurance. I mean, that's my own advice. For sure, Steven's going to be the best to give you the best one. But yeah, give him a call and send him a message. And thanks again, Steven. Anything else you want to add before we just end the live?
No, I just want to say thank you, Falcone. It's been a pleasure. I really appreciate you setting this up for us. And and again, if there's any questions, feel free to reach out.
Yeah, and I think we're going to have a talk soon, like I think for me, just to do the annual checkup, right?
Yes, coming up. Yeah.
All right. Okay. Well, thanks, Steven. Thanks, Guy. And yeah, just follow the social media links that we're going to send on the comment section.
Perfect.